Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpar Research and Analysis, and this is daily analytical report where I will tell you what's going on the markets, and we'll try to look for some decent trading setups on the charts. As always, let's start with calendar, because you always have to start with calendar. Even if you're a technical trader like myself, you have to know when the data is published. Like, for example, yesterday we had a huge movement on Canadian dollar because of the rate increase in Canada. It was largely, well, I don't want to say that it was surprise, this movement, but if you're a technical trader, you could have expect that movement, because that's what the trend is. We also had trend continuation patterns, so price action was largely showing us that we should have a downswing, and it came along with fundamentals. So let's take a look on the calendar right now. As you can see, we are waiting for PPI data from United States. It's not so influential, but sometimes traders look at that. Initial jobless claims, as always, on Thursday, not a surprise. Here, data from the housing market, and Janet Yellen is about to testify today again, but it was already done yesterday. So we had a speech from Janet Yellen yesterday, and that was the most important thing that happened, and created huge movements on the market. So let me tell you what happened. Well, her speech was perceived by the markets as a dovish one, so it helped stocks, all stocks actually, because MSCI World Index, MSCI All Country World Index, so combining all indexes all over the world, went significantly higher and touched all-time highs. So we are on the highest levels in the world, and most of the indexes. Technical analysis, I will start with DAX and S&P 500. You will see that we are not far from all-time highs. There also, it caused a dovish statement from Fed, from Janet Yellen, sent American dollar significantly lower, because the chances for a rate hike, odds for a rate hike this year are dropping significantly. September rate hike probability is 12%, and December is 50%. So you see that those rates are dropping sharply. What did Janet Yellen say exactly? Let me tell you. Just a second, please. Okay, Janet Yellen said that because of the neutral rate is currently quite low by historical standards, the federal funds rate would not have to rise all that much further to get a neutral policy stance. So that is dovish. She also said that, I do believe part of the weakness in inflation reflects transitory factors, but well recognize that inflation has been running under our 2% objective, that there could be more going on there. She also added that there is uncertainty about when and how much inflation will respond to tightening resource utilizations. About the reducing the balance sheet, she said that they will start to do that this year, but without giving any exact date. So again, her speech, her testimony was perceived as dovish. That is why stocks are going higher and dollar is weaker. But also we had let me show you this week we had data from China. Okay, Tuesday, Wednesday, yes. As you can see, exports trade balance data from China, and as you can see, much better than expectations. So this also helped stocks to climb higher. That was coming together. So this optimism from the data from China, and also at the same time dovish Fed. Yesterday we also got important news from the oil market. We got data showing that that stocks declined sharply. EIA crude oil stocks change, as you can see, minus 2.8 million was expected, but those stocks declined minus 7.5, which is a pretty big number. And it helped oil, but for just a little amount of time, because now oil is not pushing higher. Also, we found out that Libya and Nigeria will pump oil at stronger rates as it was previously thought, so they won't take part in those OPEC cuts, which is also negative. Well, it was kind of expected, but it's a negative information for the oil traders. We're gonna have an OPEC meeting in July 17th, but we shouldn't get anything significant there. It was quite busy. It was quite busy because, as you can see, we also had the interest rate decision. That was a good one because it was expected that Bank of Canada will rise interest rates from 0.5 to 0.75. But in the same time, we got pretty hawkish comments from Mr. Polos and from Bank of Canada, which caused the Canadian dollar to go up. Right, the value of Canadian dollar went significantly higher. Usually, when you're expecting an interest rate rise, you shouldn't get such a big movement, but it was influenced by those remarks from Mr. Polos. Also, oil, Janet Yellen, Canadian dollar. I think it's all from the fundamental point of view. So as you can see, pretty busy. When nothing happens, nothing happens. I won't get you news out of the nowhere, right? But when something happens, it's sometimes markets are interesting from the fundamental point of view. I'm not a big fan of fundamentals, but today we got some nice movements because of those news, and that was pretty interesting, and I enjoyed showing you that what happened overnight and yesterday, because all those informations about interest rates, odds for a rate hike from the oil market, it's very interesting, at least for me. So my friends, as you can see, we are waiting for the PPI data and data from the housing market from Canada, and another speech from Janet Yellen, but I don't think it will be so important as it was yesterday. And as for tomorrow, we will have a webinar before retail sales and CPI, but those will be an important data will be shown tomorrow. Okay, let's take a look from the technical point of view then. This is dollar index, which, as you can see, hit new lows. That low was broken yesterday, but maybe not broken, let's say touched. And the price went a few points lower and then retraced. So that can be considered as a strong support. What do we have here is the descending triangle formation. The resistance for this descending triangle formation is this green line. This is also a midterm downtrend line. As long as we stay below this area, so a combination of those two resistances, the sentiment is negative. And what I would do, I would look for a bearish price action here on those levels, and actually we have kind of a bearish reaction because the price retraced sharply even a few pips before touching this downtrend line. Right, we can see that traders started to sell. In the midterm, the price should break those lows, make new lower lows, and we'll see what's gonna happen after that, but it looks negative. Dollar index looks bearish, and all technical signs here are bearish. The positive sentiment will be back once the price will break this area. Well, that will be the chance not for a major reversal. I don't want to tell you that we are about to witness a major reversal here, because we don't have any signs of that whatsoever. But I'm telling you that when those two lines will be broken, that will open a way for a bullish correction, at least aiming here. So also it won't be a great idea to enter this position from the risk to reward ratio. It would be much better for our wallet, our portfolios, if the price bounced off those levels and break that support, because the potential movement is much higher. S&P 500, that's a good one. So we bounced off this level, of this area, which we marked a few days ago. That was a combination of those three. So this horizontal support, long-term horizontal support, this gray one, as you can see, and the red one is a trend line, as you can see here. So that was a combination of those three. The price actually bounced from that support, went significantly higher, tested that again, the first horizontal support and a trend line, and then went significantly higher. Okay, as you can see, we have a resistance here that was respected here. Then they attempt a breakout, but for now it does not look good. It looks like a false breakout, and the price can possibly retrace. The thing is that the sentiment here is positive, still positive. Even if with the false breakout here, the closest support is on this dynamic resistance, which is now a support. It was a resistance before. That blue line connecting lower highs. Even if they won't hold the upper green line as a support, they still have the next one here. So it's all good on S&P 500. And now DAX, which is trading very technically. What's happening here is the price reversed with inverse head and shoulder formation, which happened on an important horizontal support here, right? Some may say it's a double bottom formation. I do believe it's a inverse head and shoulder formation. You can clearly see that, see it on H1 chart, left shoulder, head and the right shoulder. What is interesting is that you have a neckline here, right? And the neckline is in the same time uptrend line. It can be even slightly lower, like that. So a breakout of a neckline. Actually, we do have three support, three resistances in one place, because we got the uptrend line, we got the neckline, and we got the horizontal resistance here. Resistance after breakout, support, 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 support after breakout, resistance, resistance. So here we had a combination of few important resistances. Why is it important? It is important if you want to understand the market mechanics, why the market moves like that. Because when you have a resistance, so many resistances means that many people who were going short here were having stop loss orders above that resistance. Because if you have a resistance from 3 different trading techniques, you get orders from all those traders using all those techniques. And a stop loss order for a short position, because they were going short and stop loss order had to be above the price. Stop loss order for a short position is a long position. So when the price went there, met huge amount of long positions here, which just accelerates the movement, increases the momentum, as you can see here. From this critical point, we got a critical movement of stop loss activation. After such a thing, what is probable is a small reversal here, small correction, but in the longer term, mid-term, long-term, we should expect a bullish continuation. I wouldn't be surprised if the price advanced higher and higher and higher, especially that we are back above the uptrend line and above this horizontal support. We should be alright. And oil, let me show you oil. Downswing, upswing, downswing, upswing, but we are still below the resistance created by the lower line of that recent correction. I don't see a lot of bullish potential here. Well, to be honest with you, I don't see a lot of bearish potential here, right? At the same time. So for me, it's more a sideways trend here, which is completely not tradable for my system, which is focusing on trend following. Now, friends, let's go to the Forex market. On the Forex market, as expected, cable is going higher. We were expecting that a little bit earlier here. It went higher 70 pips, but they touched another important support. As you can see here, resistance, resistance, resistance. After the breakout support, it's also 50% retracement of this, and the lower line of the flag, and also in the same time upper line of the wedge. So we went higher from that bounce. We got 70 pips. But from that bounce, from this level, we got already 140 pips and still counting. And that's a good one because it's our upper line of the flag, and after the breakout we tested that as a closest support, which makes this breakout attempt legitimate and the price should advance higher. That's my view for cable. American dollar to Swiss franc, here was this flag. American dollar to Swiss franc, here was this flag. Flag in a downtrend should result in a breakout of the lower line of the flag. And they tried yesterday, it was a false breakout. They tried today, it was a false breakout. So now maybe the price will advance higher from this, but no strong signal here. Australian dollar to American dollar is outperforming, is in a very good shape. Actually, from the fundamental point of view, we don't have a lot of data that would support this movement. I thought that those analysts can explain everything, but as I can see now, they cannot. What can I tell you from the technical point of view, from the practical, from the trading point of view, is that it's increased momentum after breakout of a resistance. Then we do have Janet Yellen. Then we do have increased momentum after breaking this dynamic resistance here. Now they're gonna be fighting with those highs, yearly highs first of all. Where we do have them, yes, yearly highs so far from March. We're gonna fight for new highs in 2017, and then for new highs since April. To this resistance, we do have 20 pips, and I would be really surprised if the price didn't get there. Next one, American dollar to Mexican peso. As expected, we do have new lows. We broke that horizontal support, price set new lows. No surprise here. So we're just gonna leave it as it is. Okay, like that. We do have a trend line. As long as we are below the blue line and the green line, the sentiment is negative. Euro to American dollar. That's a bit unexpected one. We got a strong decline here. We can remove those patterns. I'm sorry. What we do have here is a defense on a local horizontal support. So far, defense is successful. In the long term, obviously, there's a buy signal, and the buy signal will be present as long as we are above the blue line here. But it could look a little bit better. For me, no clear signal here. Gold also used that positive sentiment yesterday a little bit because they went above that horizontal support, but as you can see, gold is weak. They are struggling with holding this price relatively high. I'm a kind of a fan of a gold, you know, but more of a physical gold in the long term, and I don't like what I see on the chart of the gold. At the same time, I'm a trader, and I try to be as objective as possible. I try not to have biases, and this allows me to see that the sentiment here on gold is not very positive. The price is just higher just because of the American dollar. There is no fundamental drive here. There is no demand for gold. Euro to British pound. So they created this ascending triangle. The price went higher, which was expected. Then they went lower. I thought that this support will hold, but it didn't, which can possibly make this a false breakout, a very dangerous formation. But as long as we stay, let me say, above this horizontal support, we are all good. As long as we stay above that, we should be fine. Silver and this flash crash, which is actually becoming a false breakout. With the recent development, it looks like a false breakout, which maybe will allow the price soon test the recent uptrend line, but no strong signal here as well. Not tradable. American dollar to Japanese yen, bounce of horizontal resistance, and now they are bouncing off the first local support, 23.6. As you can see here, it looks decent, and current reaction also looks promising. I wouldn't buy here, for me it's too high. Maybe here on 50. But if you do not care, it's promising. This price action here, so long tails on the horizontal support, it looks promising. Euro to Japanese yen, well, sometimes you have to take profits. It cannot go this sharp forever after such a strong directional movements like we saw here. Corrections are usually strong, and we can see that now. Reversal is pretty sharp, and the closest support is here, so we still have a lot of place to go there. Yeah, 50% Fibonacci level won't be a problem here. I don't think that buyers would complain. Australian dollar to Japanese yen, very technically. Upswing, flag, upswing. Also breakout of the long-term resistance here. And most probably upswing will be continued. New Zealand dollar to Japanese yen, waiting for a breakout of the long-term neckline, which will be long-term trigger for an upswing. And British pound to Japanese yen, defends local support. And here is this loonie, American dollar to Canadian dollar. So I told you that from the technical point of view, it was expected. Look at that. There's a downtrend. There's a trend continuation pattern, which is a wedge, which indicates the trend will be continued. So the trend is continued, and then there is a flag. A flag is also a trend continuation pattern, which indicates that trend will be continued, so the trend continued. There is a flag again, breakout, there is a bigger pennant, breakout, there is a flag. Flag before resulted in a downswing, here and here. Flag usually result in a trend continuation. Trend was bearish, trend is bearish. That's obviously a reaction on hawkish Bank of Canada, but here technical analysis and fundamentals, they do come together. That's always very good to watch that. And Australian to Canadian dollar, that's a good one because we had two strong currencies here. We could see what's happening with American dollar to Canadian dollar and Australian dollar to American dollar. You could see that. So we got a breakout of a neckline, then this comeback, which was caused by fundamentals, and they bounced. They bounced to this level. On the daily chart, it's an outside bar, this black one. Outside bar, bouncing over trend line, uptrend line, but from the bottom. So that's a sell signal. That is a sell signal. Outside bar, after the breakout, bouncing over resistance, that is negative. Okay. Thank you very much, guys, for watching our webinar with Alpari. Now a short break, and after that a webinar about traders' psychology, about traders' mind, about how you should approach trading, what you should think, how, when trading. Thank you very much for staying with us. Remember, for more information, you should visit our Twitter account and our website, alpari.news. Thanks very much and goodbye.